VAT on the disposal of tangible assets. If a business is VAT registered, you will remember that you may claim VAT back when you buy an asset, such as computers or a vehicle, etc. You have studied this before when you looked at VAT. However, you also learned that there are certain things you can't claim back for example, a passenger vehicle. Keep in mind that VAT may be claimed back on any item which is used to directly contribute to the profitability of the business, and it is very hard to explain how a passenger vehicle might do so. Obviously, if you are a car hire business, you would be able to claim for passenger vehicles, but the onus is on you to prove this. Because you can claim VAT back when you buy the item, the contra of that is that when you sell the item, VAT will have to be charged and paid over to SARS. So even if you trade it in for a very low value, as you've made a loss, you still need to charge VAT on this item. The account that you will use is exactly similar to when you were selling your stock. You would debit your bank or your debtors, or if you're trading it in, your creditors, with the inclusive selling price, exactly like you would when selling stock. On the credit side, however, instead of crediting your sales account, you want to show this against the sale of the asset. Remember that we use the asset disposal account to show the selling price of the item. So, we will use asset disposal again here. If you are given the inclusive selling price, remember that you can calculate the sales price exclusive by timesing by 100 over 114. At the same time, you will need to credit output VAT. You can calculate this as the selling price times 14 over 114. As you can see, the calculations are exactly the same as when selling stock. And in addition, the accounts debit and credited are very similar. The only difference is that instead of crediting sales, you will credit asset disposal. You can now try exercises 5.9, 5.10, and formative assessment 5.11.